Hi, and welcome to the Market Alert for Friday, the 30th of October 2020. So stocks, dollar and Bitcoin jump, and bonds and obviously gold and silver move lower following record GDP. So what was this record GDP? Well, it came out at 33.1% in quarter three, which is no surprise really, given that we were locked down in the first quarter. And then, of course, when everything gets back to a sense of normality, or to a certain normality, people spending, and also don't forget in the US, everybody that earned less than $74,000, including husband, wife, etc., all received $1,200 from the government. So there was a lot of consumer spending going on in the second quarter as well. Sorry, in the third quarter. So no surprise there. Wait till the next one, though. That will be an interesting one. However, the jobless claims yesterday, pandemic emergency jobless claims, soared to record high. And our friend the criminal, this woman here, Lagarde, convicted criminal, ECB holds rates unchanged, QE unchanged, and risk still tilted to the downside. I was going to swear then, but... Yeah, I mean, you can't make this crap up, can you? I mean, you know, they're going to throw everything in the kitchen sink at it, aren't they? Because here we go. Watch live, ECB's Christine Lagarde explain how she'll save the world again if needed. Yeah, by just keep printing and printing and printing. These people are incredibly dangerous. You know, they just won't let the system fail, because they don't want it to happen under their watch and be remembered for it. And yet this woman's a convicted criminal anyway. She's the ideal one to let it all sink under, frankly. Also yesterday, pending home sales came out in the afternoon and they slumped. So a lot of news yesterday. But overnight, things are starting to see the downside again. Stocks struggled to stabilise after worst rout since June. And we had a bit of a pullback, and here you can see fears of another February are gripping the market as well. So that's the latest headlines that we're seeing there as well. So in yesterday's session, we see that the market had traded up to the DP level. I'm just going to fast forward a second. So you can see that when I was recording the market alert yesterday, prices were heading for the DP level. They hit this resistance and then traded to the downside. And then down here, we see them buying back into the market. So I'm just going to wind this back now so you can see this in a bit more detail. So we've got the market with a narrow bar there sitting on the BRN. We've also got the buying coming into the market at this level as well. So we can see that the shorts are taking profits. And then in this bar here, you can also see how prices are bouncing off the BRN, because that's what you've got to the left as well. So prices opened and they traded to the upside sharply. No surprise there. You can see prices just driving up, and they stop right on the BRN there. Sorry, well, the BRN and the DP where we had the previous selling. So prices then trade sideways. Very high volume in this bar here, and it's failing to actually break above the DP. You'd expect prices to sort of drive through with that sort of volume, but it's not. It's a very narrow bar. They're either absorbing the selling coming into the market at this area, trying to move prices. However, this fails because the market attempted to move through, and then we see the selling coming into the market here, and then moving to the downside. And what I did here was take a short, because this was the same price action and setup that we'd seen the day before, and the market moved lower, traded down to the 200 MA, and it then turned red. And at this point, I was sitting on 70 points. I'm waiting for the market to close back above the 5-bar moving average. It started to close back because on the previous day, if you look at yesterday's market alert, I missed out on a lot of points. So I thought, okay, today I'll wait until the market closes back, forgetting that prices were already finding support at the 200 MA there. And then it just came back 60 points in this bar, and then straight back to the DP, taking me out at break even. So rather irritating, but that's the way it is. I was hoping that we would break through and head down towards the low before the market found support and moved to the upside. That happened in the afternoon. which we'll look at in just a moment. So the DP had already established itself as a resistance area, and yesterday I spoke about these previous highs of resistance, given the increase in volatility, as a place to consider putting stops. But of course that opens up the question of a bit more risk. Well, is there? Because if you're only risking 1%, it just means that you're going to bet less per point by having the stop above these resistance areas, as the volatility has increased over the last few days. And here is an example. If you look here, you've got the scalp level here, which is near this minor support area or psychological area. These are all 12.5 points, these lines. They divide the 50 points equally. And as I move forward, you'll see prices came back and stopped this out. But had the stop been above the DP where we had that resistance, prices traded sideways and then came back down stuck in a sideways move. And this is something else I've noticed over the last few weeks as well, that prices get to 830 and they start to trade sideways. So here again now you can see how prices have come back down to past the scalp, which was at this level when it was drawn on the chart, because of having that bit more of a cushion there with the increased volatility. So prices trade back up to the DP once more, and here we see again the resistance. Prices failed to go above. This is incredible display of resistance at the DP level that you're actually seeing here. We attempt to go through, but again, as I've drawn in here from this, where the first sell that I took earlier on in the morning, the high of this bar, the market trades up to it and then fails to hold above it, and then prices return to the downside. And then we have another potential sell, but we now know we've got this and this here. So ideally this should be an area where we could consider, by again only risking the 1% but reducing the bet per point to accommodate that. Then prices again do exactly the same thing. They come back and move to the upside, and you've got an increase in volume there to around 80% of the selling, and the market doesn't move lower. So they bring it back once more with an increase in volume there back to the DP level. And you can see that we've got this sort of triangular shape that's being created here. And normally you would expect the market to break to the upside with this type of price action, but on this occasion it didn't. That resistance was quite something, and then prices again move down, and they trade down to, in a choppy formation, down to the 200 MA. And again, this one, if the stop had been above here, would have remained intact. So yeah, the volatility has certainly increased, and then we move on to we've been through all of the news, the Lagarde, the jobless figures, etc. You can see the volatility there through lunch, and then we head into the afternoon. There was news just before the market opened, and in came the selling. The down moved sharply to the downside. The DAX followed. Again, you've got all of this resistance across here that we can see, and we've also got the close. Prices sold off from the open, and then watch the volume as prices approach the low. I'm just going to do that again slowly. You can look at the volume building in this bar here, putting the brakes on the downside right on the low, which is where I thought the market was going to go and have a look at earlier in the session, the morning session that is. And then of course prices reverse. They use the GDP, 33% increase in GDP, and they no longer want to move the market to the downside. Here we saw prices trying to move lower in this bar here. Volume is huge, and then all of a sudden they just reverse the market from this point, having looked through the 5 bar. And then it's again, you got resistance here at this level. You've got the 20 bar moving average and the BRN. The market came back through here. I was looking to see if we could get a possible short off this, but prices wouldn't break the 5 bar moving average. the MDI turns green, and prices continue to move to the upside. Then we had some news, and again this was used to move the market to the upside. I think I've got the news just here somewhere. Yeah, pending home sales. So the pending home sales came out, and they were negative, which we saw again in the headlines. And but this didn't deter trying to bring the market back. As I said in yesterday's market alert, they'll do everything they can to try and bring it back. Again, you can see prices bouncing off the 200 MA there as well, with the DP again in the sight of moving the market to the upside. And you'll see prices trading up to this level, just to it. And as soon as you get to it, you then get the potential weakness there, and then prices will reverse off this and then start to move lower, which we'll look at now. So let's go to the 2-minute chart for yesterday. It's just and let's just have a look at what happened after the 2:30 or 3 p.m. Prices managed to get through the DP and then came straight back through, and again once we were through, prices moved to the downside, and then overnight prices have already moved sharply to the downside, as you'll see here. We again, the DP major resistance, and then once prices were below the averages there, they've moved sharply to the downside. We're already through yesterday's low, which we'll look at in the daily chart in a moment. So it's very important that the market holds at this S2, otherwise we go down to the S3 level, which is down here. And once we get through the S3 level, we have to switch to the daily chart and even possibly the weekly chart to find where the next downside target is. So I'm just going to scrunch everything up in the daily chart and have a look. And we got plenty here to go at, actually. So let's have a look. The next sort of low that sticks out is here, but it seems a bit of a distance away. But then again, never say anything in 2020, because we live in very strange times indeed. You could use these other lows as prices start to move lower, where you've got these rising lows, and have these as targets as well in areas of support. Alternatively, what we could do, if I just delete these for the moment, as we're through all of these, is we could actually draw in some fibs as well from this low to this high, and that would give us this range here as well. So we're already through the 38, the 50, and they're sitting at the 62 at the moment. So I'd be inclined to do this and then add in, just to find if we've got the double support, which I would take off this one, which actually again combines with this fib here, which is going to be the 78. So this area here, if we were to see a major drop in prices, which never say never, but it's a long way down to that level for the DAX to trade in one day. So that's what I would do, though, just to see where the roadmap is and the bigger picture for these prices. So I'm just going to reset this now so I can see where we are in the bigger picture, and then save this. So yeah, overnight there is weakness around at the moment. That doesn't mean to say it will last, because they will do everything they can to try and bring this back, as we saw yesterday afternoon, even on bad news when they got the pending home sales coming out at minus 2.2, they still managed to try and bring the market back. But at the moment we've got support at the S2, and also we'll have some resistance at the low as well, but they'll aim to try and get the market back above this area. And then finally, implied volatility is moving back. It was moving down yesterday. In fact, let me just I just want to add another one in here, because I've redone this. Is that the one? That's the one, yeah. So we're coming off the 21.89, say 22. So 44 If the implied volatility gets to around 44%, then you'd expect this down move to be over. And anybody who's followed the implied volatility over the years will know that all of these small increases here are 100% increases in implied volatility, which tend to stop the down move, apart from here, which was exceptional, of course, because of the COVID. But otherwise, you'll get these small spikes of increases where the correction is over, and certainly at the moment we're seeing this correction unfold. And there you've got the color-coded one were red and below the 20-bar moving average on the upside as well. So today we've got Friday. What news have we got? 9 a.m. we've got the German prelim. Then we go through to the core PCE for the US, personal spend in Chicago, and then revised UOM at 2 p.m. So we have some news there today as well. Okay, I've gone on way too long in this market alert, but hopefully there's some very useful information in there for you. As we approach the weekend and another day less towards the US election, we could expect anything today as well. Okay, as ever, thanks for watching. See you in the next.